Hey everybody, Chris Englebert with Englebert Financial Advisers in Allentown, Pennsylvania with this weekly Rotella Q-Cast update. Again, we'd like to thank the crew at Rotella for helping us put this on a weekly basis. We really appreciate it, guys. You can see by my slide behind me, I'm talking about inflation and what does it mean to me. You've heard a lot of talk. There's been a lot of headline news about how inflation is running rampant and inflation's the hottest it's been in 40 years. And what do we do about it? Well, if you really look at the definition of inflation, it really boils down to everything ends up costing more. So something you bought last year for $1 now costs $1.08 is what ends up happening. So don't get fooled by the headline numbers. And again, we're going to walk you through what happens during inflationary periods of time so that you understand how to deal with it, you understand and know what it is, and you can see how it does affect you. So one of the other things that we want to talk about is we want to talk about bad inflation versus good inflation. And you're hearing a lot, again, headlines about the Fed is raising short-term interest rates to combat higher inflation out there. Well, one of the reasons why the Fed actually needs to raise interest rates and it sounds counterintuitive. Well, if you raise interest rates, you might slow down the economy, which then ends up, having inflation come down. The reason why you want to do that is there's bad inflation and good inflation. So if you look at what happened after World War II, I show inflation in the Wehrmacht Germany situation. And many of you may have grandparents or people that were around during that period of time. But in Germany, you had inflation that got out of control to the extent that people were literally bringing wheelbarrows full of Deutschmarks in order to buy a loaf of bread. We are nowhere near that in the United States as far as that kind of inflation, but that is obviously bad inflation out there. Now, the other thing that happens when you talk about inflation is there's always two sides to every coin. The worst thing that happens to inflation over the long term is that it erodes your purchasing power of your money. There's no question about that. So people that are hiding with their money in a savings account literally are losing 3, 4, 5% a year because that's what inflation does, is it erodes your purchasing power. So what do people do in inflationary environments? And this happened in Argentina during the 1980s, where they were running at inflation rates of 2 to 5% a month. People were buying groceries on their credit card at the beginning of the month because they knew that by the time they went to pay it off at the later in the month, it would actually be cheaper by doing it. Again, we're nowhere near that, but you can see that if you're thinking about buying something, you better buy it now because obviously it's going to cost more in the future. So inflation, though, one of the other things it does cause more inflation because people's expectations change and say, well, it's going to cost more, so I better better buy it now, which drives up demand. It does raise the cost of borrowing. You saw interest rates go up recently. So therefore, mortgage rates now are higher, which means people can buy less of a house. But the flip side of it, it does lower the cost of borrowing, because if you're borrowing money to buy a capital good like a house or a piece of machinery or something like that, you're paying it back with cheaper dollars in the future. Now, are you confused enough as far as what inflation does to you? Well, again, there's two sides to every coin. It reduces unemployment because obviously companies are out there going, hey, I can get more for the goods that I'm producing. I better ramp up production and get a lot of goods out there. Well, they need to hire people. But then by the same time, many times it reduces employment because sooner or later people say, you know what, I'm not going to buy XYZ anymore. I'm just going to stop. And all of a sudden you have a situation where inflation comes down because people aren't buying those particular goods or those particular services. There's a couple of components that we're going to go through in a minute as far as really what makes up inflation out there and why it goes up and obviously why it goes down. So one of the things I want to point out to people is this chart here shows what they call the consumer price index, the core CPI. And there's a couple of other squiggly lines there, which we can get into. But the point that I want to make here is that if you look over at the gray bar right behind my head, you'll see that was the last recession in 2008, 2009. You can see that inflation dropped like a rock. And literally for about a 10, 11 year period of time, inflation was pretty much going sideways. The point that I'm trying to make here is that we've actually been below trend on historic inflation norms out there. Inflation typically runs 2.5% a year, and we were running sub 2% for almost 10 years. Then you can see over on the right-hand side, and this is what everybody's worried about, is the rocket-like move of inflation going almost straight up in the last 18 months. We do not think that's going to continue. Instead, what we think is going to happen is you're going to see some kind of moderation as far as inflation goes, but it's going to be higher trend. It's not going to be a lower trend like it was back in the last 10, 11 years. We're going to be right around 2.5 to 3%. So we've created, or we've seen, the perfect storm for inflation. The big thing is the disruption in the global supply chain. So China has a zero COVID policy where they literally shut down their factories at any sign of COVID. That causes supply chain disruption, which literally is rippled through the economy. You add to that the fact that we had this incredible flooding of our financial markets with people getting transfer payments, et cetera, during the time of COVID. You've got a ton of cash rippling through the economy out there, chasing fewer goods and services. And then the third thing is the energy inflation that's out there. We've been a big bull on energy the last 2 years. We thought the price of oil was way too low at $40 a barrel. It's now top $90 a barrel. But not only is inflation measured in the price of gasoline going up, inflation also gets embedded in things like a pen. Anything that's made with petroleum products, wallpaper, paint, shoes, etc. Anything that has petroleum products is going to continue to see inflation edge through the supply chain as manufacturers go and buy those raw materials, which are now 20, 30, 50% higher. But we do think there's some good news out there because, again, we express that there's several components to inflation out there. And one of the components that have really caused inflation to go up, believe it or not, is used car prices. In the last 2 years, used car prices have jumped 45%. If you want to really watch used car prices on a monthly basis, you can get on the Manheim Auto Auction website. They have the Manheim used car indexes. And for January, it's beginning to roll over. That's a component of inflation. And we think what's going to happen as used car prices moderate, as new car prices come out because of the supply chain disruption being solved later in the year, one of the major components of inflation is going to come down. The other thing is that as more and more products become available, you're also going to see inflation come down because you got to remember, inflation is made up of a measurement of goods and a measurement of services out there. The other thing, and finally, what we'd like to conclude with is that we do think energy prices are going to moderate for the rest of the year. Now, I could do a whole diatribe on what's going on with energy prices, the fact that energy companies have reduced their capital expenditure. We had about 900 rigs 10 years ago drilling for oil. We have about 400 rigs, and a lot of people are saying oil's going to 100, 120, $130 a barrel. We actually think we're reaching the top end on petroleum prices because what happens is once we get over about $75 a barrel, they open up every oil spigot that we have out there. We would not be surprised to see a pullback of at least $20 a barrel in oil in the near term, which could end up helping moderate inflation. So that's a crash course on what inflation does. The two best investments in an inflationary environment are real estate and stocks. Now, we think both of those have to adjust a little bit, especially the real estate market. But the point that we're trying to make is that inflation's been below trend for the last 10 years. We think inflation is going to be above trend, but we don't think you're going to see inflation at the crazy level it's been for the last 18 months. So if you want any more information on inflation and investing, you can always reach out to us. You can go to our website, englebertfa.com. All of these videos are posted. You can go back and look at some of our older videos so you can see what we're talking about. But again, thanks to Rotella QCast crew, and we'll be back next week.